HCLTech. HCLTech is the big mover, 3.5% higher as Q2 was a mixed bag. The company lowered its guidance for the full year, but the company is guiding for a very strong H2, Q3 and Q4. I had a chat with the management. Listen in.
We would have expected a little bit more of revenue, but if you look at the Q2 revenue breakdown, there is services, and then there are some assets which are also embedded into the services P&L, and then software. Our asset revenue reduced about 25 million. It's a very tactical thing that kind of dropped by 25 million based on some projects which where the execution got over. So other than that, if you take the services within services, it's a pretty strong growth. It's probably close to 2%.
Okay. So the only reason for the Q2 miss compared to expectation was this $25 million reduction in the asset revenue, right?
Yeah.
Okay. Yeah. Peers like Infosys are guiding for negative growth in the second half of the year. Your guidance implies a very strong 3 to 4% pickup in both Q3 and in Q4. What makes you confident that you will be able to achieve it?
Reema, first of all, the nature of our businesses are different. And if you look at our outlook for Q3, it's informed by three factors. One is the large deal which will go live by 1st of November, which is going to give us some significant revenue in Q3. The second aspect is for the software business, it is seasonally one of the top quarter, which means O&D will see a spike in the software business. And the deals that we have signed in the last 2 quarters, some of them, the transitions are over. They will go into steady state starting maybe end of October onwards. And also there is some flow-through impact of the revenues that we had in September, which will have a full quarter impact. So all of this adds up to a good outlook for Q3. And a similar extrapolation to Q4 is possible because even the large deal will continue to have an incremental growth in Q4 on top of Q3.
Okay. Just on that point about the Verizon deal, which will start contributing from 1st of November, how much will it contribute in November, December, and Q4?
Reema, we do not call out client-wise numbers, but of course, a lot of optimism is built because of the we are going live, things are on track. I think that's what is giving us this optimism.
Prateek, can you tell us what led to the margin expansion, sequentially 140 basis points?
Yeah, sure. So there are 3 or 4 factors. I think if you see your cost breakup that we give in great detail, one of the pages of the investor release, there is a sharp reduction in the expense on third-party contractors, which is 70 basis points drop. Apart from that, other discretionary expenses like travel, like, legal expenses, other discretionary expenses also saw a sharp drop, 50 odd basis points. And then, of course, the headcount reduction also led to some savings there. So in total, we have driven a lot of cost savings this quarter, and that has delivered. It's actually 150 basis points improvement on a quarter-to-quarter basis. It is a 50 basis points improvement on a year-on-year basis as well. So that is, what drove that.
You are giving a wage hike from 1st of October. What will be the margin impact in Q3 and in Q4?
So Q3 should be about 60 to 65 basis points. And Q4 should be another 25 to 30 basis points on top of that.
Okay, 60 to 65 basis points margin impact in Q3 and about 20 to 25 basis points in Q4. Prateek, this cut in discretionary expenditure like travel, legal costs. Are you embarking on some sort of a cost optimization, cost-cutting plan at HCLTech? Because historically, your margins used to be, 19, 21%. That used to be your guidance 2 years back, and now you brought it down. So do you think the company, are you on some cost optimization plan to get back to those margins above 20%?
Reema, that's an excellent question and a very intuitive one. You are absolutely right. We have voiced our aspirational margin to get back to the 19 to 20% band, and that is what we are very laser focused on. This year is 18 to 19%. We started the first quarter week, as you know, 17%, so that was like little below, and we've ramped that up in the current quarter, and we'll definitely be in the 18 to 19% for this year. Obviously, it's a slow growth year compared to our, last quarter. Last year, same quarter, we had a services growth of 19%. Those days are gone. It's a different macro that we are going through right now. But as soon as the margins will also follow the revenue growth as and when we get that growth back.
CVK, just purely executing the large deals that you've clocked in over the last few quarters, including the current one at $4 billion, do you think double digit is possible in FY25?
We have a very, very good large deal execution track record, right? Right from the days of Volvo to many, many large opportunities we've executed, which is across multiple geographies, multiple technologies, people, all of that we've executed well. And that's what we're going to do for the current strategic partnership that we have in hand. I think it will continue to give us good momentum going into FY25. But I think it's a little too early to kind of view what FY25 will look like. I think the planning cycles are getting a little shorter. Whatever plans you make may not hold good 3 months down the line. So there are too many variables at this point for us to get any sense of 25. But all that I can assure you is we will have a strong exit because Q3 is going to be a strong quarter. Q4 will be another strong quarter on top of Q3. So we will exit strong. I think I have visibility only till then. Then we will have to see as it comes.
So after this near $4 billion of deal wins in Q2, what's the pipeline and the funnel? I remember in our last interview, you said the pipeline and funnel is at all-time high levels.
Yes. So last quarter, it was at an all-time high with the $4 billion of closure. Obviously, pipeline has come down a little bit, but there is also a lot of new pipeline which has got added. So at this point, I am about 10%, to be precise, 9% below my peak pipeline. That's where we are.
Got it.
And a lot of that will convert this quarter and next quarter, which should give us some more momentum into FY25.
So deal wins in Q3 and Q4 based on your pipeline, which is still very strong. Will it be closer to that $4 billion or will it get back to that average of $2.5 billion that you've been seeing for the last few quarters?
Yeah. Reema, to be honest, the $4 billion is an outlier. We've been clocking 2 to 2.5. So my aspiration will be to get closer to 2.5. Even though our baseline is generally 2, on a good quarter, we could get to 2.5. That's the kind of band that we are working on. 2 to 2.5 billion. And Reema, once again, I want to reiterate the bookings that we disclose are all net new bookings. These are all new deals, firm deals that are signed. This does not include rate card deals, framework deals. This does not include renewals. So it's really incremental commitment from the customers. That's what is counted in the new bookings that we disclose.
Very quickly, CVK, the performance was weak in manufacturing and technology. Do you see it reversing anytime soon?
See, manufacturing was a technicality. Initially, I talked about assets. 25 million was less, and that had a big contribution coming from manufacturing vertical. So from a pure services, I think it will continue to do well. Technology, I think, we had a very small decline this quarter. I would say it will take a couple of quarters for the tech vertical to start showing good growth.
All right, that is a reasonably confident management of HCLTech, eyeing the second half to be a lot better. And FY25, of course, will be supported by a bunch of deal wins that the company has done. The stock higher by almost 3%. Take a short break.